All right, everybody. Thank you so much for joining today. Today's topic, here's what we want to talk about is alternative investments and more specifically multifamily investing. What I want to share with you, I want to share with you the secret to growing your wealth without having to give up your time. And I want you to think about that because here's what happens to most of us is we get a day job and we go work 8, 10, 12 hours a day. And what we're doing is we're trading time for dollars. And what I want to show you are some strategies of how you don't have to trade time for dollars, how you can actually have your money working for you. And I'm actually going to show you how this investment strategy, investing in apartments, can actually um, do better than the stock market. Okay, so let's talk about that. Does that sound exciting? So if you could learn how to do an investment that didn't take any of your time, just a little bit of education, but not much, any of your time, and you'd actually outperform the stock market and pay less in taxes, would you want to learn what that would look like? All right, I'm definitely getting some yeses in the chat here. So let's talk about what we're going to cover today. Specifically, here's what I want to cover with you today: how investing in apartments can truly accelerate your wealth and actually reduce what you pay in taxes. Here's the cool part: you don't even have to deal with the tenants, the termites, or the toilets. Yeah, that was something that really slowed me down at one point, and it held me back from getting into this type of investment. I'm going to show you how you can actually do this type of investment and not have to worry about any of that. Cool, right? So here's I want to call this out. I just got to be real honest here. We we are taught from the time we're little that we need to go to school, get a job, and when we start making money, start investing it in the 401k. That is our path to financial freedom, right? However, there's problems, and a lot of people don't like to talk about this. And I'm going to call them out. These are real problems, okay? So, number one is stock market volatility. If any of you have been paying attention to what's going on with your stocks, you know that it can go up or down drastically, even within a day. And this is, I like to say this, somebody, the president or Elon Musk or somebody like that can do a tweet or an X, whatever it's called. And literally within moments, the stock market can go up or down. Another example I want to share with you was COVID. And, if you had been investing in the stock market before COVID, when COVID happened, within about a matter of 30 days, about 3 to 5 years of appreciation was lost. And that was crazy. So where is the protection there? Like where is the security if you're investing in stocks at that point? The other thing I want you to think about is really high taxes. Okay. So your W-2 income, it's taxed at one of the highest tax rates. Retirement accounts are also taxed. All right. That's not cool. Now, I know there's a Roth IRA, but you still got to pay tax on that. But what we want to do is we want to have our money working for us and actually pay less on the money we make with that. I'm going to give you a strategy. And here's the third thing. Okay. Um, Time consuming alternative. So a lot of professionals, they like to try things like single family rentals. That was me. I've done that before. Airbnbs or flipping. And what they find out is they actually bought themselves a job. So that stops a lot of people. Why would you want to do that? It's actually a job. So I want to share with you really quick a story. When I first started investing in apartments, I did it passively. It was probably the absolute busiest time of my life. We were in the process of flipping a house. My son was, I don't think, like two and a half. My job was extremely busy. We were going from the bottom of the Fortune 500 to the top. So we were just doing acquisition after acquisition, new project, new implementation, and it was just crazy busy. My wife got pregnant. We're working on this house, and I was honestly at the end of my rope. And it just sucked, right? I told you I was trying to do single family rentals and flipping. I went from chasing contractors and having this second job to getting mailbox money while I was changing diapers. Okay. Like that's what happened to me. And so what I'm going to do today is I'm going to share with you what I've learned over the last almost 8 years of investing in these apartment deals. Okay. And if I can share that with you and it can change things for you, is that cool? Would you guys be okay if I share that with you? Some strategies you can implement today. Not going to cost you anything. You're just going to learn how to do this. All right. That's what I want to do. I want to share what I've learned over the last about 8 years. So here's a solution to this problem that I was just talking about. The solution is passive investing in apartments. And here's the benefits, and they really outweigh all these other problems. So you get to have the advantages of being a real estate investor without having to do any of the work. That sounds cool, right? Too good to be true? Almost, but I'm going to break that down for you, okay? Here's some other advantages, guys. It diversifies your investment. So instead of having all your eggs in one basket and dealing with the volatility of the stock market, you're now in an asset class that is a basic human need. Okay, we all need to have a roof over our head. When people have to decide what it is they're going to be spending their money on, they're going to spend it on their rent first. Okay, so this is important. Also, um, we have that it accelerates your retirement savings. This is true. I'm going to show you how it does that. It creates cash flow from the rental income, and that's passive cash flow from you. Protects your income from inflation, because what happens is as the inflation goes up, we capture that with rent increases. Okay, everybody feels it. We get to capture that too. Puts your assets into a stable investment. Like I mentioned, you get to into this type of investment that's not in the stock market. It does not have that volatility. An example that I like to share is I remember when COVID happened, I had quite a bit of money invested in apartments. I did not lose any money with the money that I had invested in apartments. I did lose a lot of money with what I had invested in the stock market. Okay, very different. Reduces your tax burden. I'm going to explain that. We actually pay quite a bit less in taxes, and it's as hands off as you want it to be. So some people like to lean in, like myself, and I said, I want to learn how to do this. Right now, I'm just going to enjoy the passive income, but at some point, I want to learn how to do it. But a lot of people, they really enjoy their job. Maybe they've got a master's degree or a doctorate, and they just want to keep doing what they're doing. That's great. But you can still do this, and it doesn't take any of your time. Sound cool? All right. Well, if you've never met me before, a little bit about me. My name is Stephen Lee Thomas. I'm a multifamily investor. I'm a business coach and entrepreneur, and I'm also a webcast host. But more importantly, what I want to share with you is I spent about 20 years in corporate America. I started as an IT analyst, started at a software company doing new client implementations, and I spent 12 years working for a health insurance company. And like I mentioned before, they're one of the fastest growing companies on the Fortune 500. Now, along the way, like I said, I was working on this very busy career. Along the way, I learned about this thing called passive investing in apartments. And the reality of it is it's actually allowed me to leave my corporate job. I don't work in corporate America anymore. I don't do it. I just do apartment investing. That's all I do. So in the rest of this webinar, I'm going to share with you the secrets I've learned and why almost all of my investments are now in apartments. All right. A little bit more about me, my partners and I, we've done a number of deals. So this isn't something I just learned and now I'm sharing with you. This is something that, like I mentioned, I've been investing in deals for about 8 years now. Some of that passive and some of that active, meaning I would actually go out and find these deals. I still today am a passive investor in other deals, and I use what's called a self-directed IRA. So that's absolutely an option for you if you're thinking about investing and maybe you don't have the cash in your bank account. Well, you probably can tap into your retirement savings and actually take some of that money out of the stock market and put it into apartments. So let's go over this. Okay, so first of all, why? Like why am I even talking about this? But here's like what you need to know and what you need to understand, okay? Ultimately, at the end of the day, what are we all seeking? Like why do we invest anyways? Like why what is our motivation to invest? The reality of it is, what do we all want? We want time freedom. Why do we want time freedom? We want to spend time doing the things we want with the people we want when we want to do them. And what that means is we have to have money working for us. And if you don't know this already, I'm going to share these 4 jobs that your investment portfolio should be doing. If it's not doing all 4 of those things, then it's time to diversify or look into some other types of investments. So number 1 is to protect your income from inflation. Number 2 is you want some long-term growth. Number three is you need your investments to protect your purchasing power. And number four is you want to reduce some risk or do some hedging. Okay. So I want you to ask yourself really quick, is your investment right now, if you're only invested in the stock market, does it do all of those things? If it doesn't, then I need you to lean in. I need you to pay attention. This is really important information. So this is where we introduce what we call alternative investments. Alternative investments is just not the stock market. Okay. We all know the stock market. We have little to no control over it, but we put our money blindly there anyways. We trust somebody else to handle these investments for us and make lots of money, right? So why alternative investments? Number one is you get low or no correlation with the stock market. So like I shared before, when the stock market has these big swings up or down, people still show up. They still pay their rent. Okay. Now there's recessions and things like that. Okay, that happens. And so maybe maybe the occupancy comes down a little bit, but people still need a place to live. Okay. But what you're doing is you're getting, reducing the correlation with the stock market. The other thing is the low volatility. And I've mentioned this multiple times is you need investments that aren't just going to go up and down. You need something that's nice, stable growth, and then an enhanced return. So what we're looking for here really is double digit growth. Because if you can get double digit growth, what you're trying to do is double your investment every 3 to 5 years. If you can do that, that's when you start getting extremely accelerated growth with your retirement fund. It's the same dollars, okay? It's the same dollars you're putting in to your retirement account, same dollars, just they're working harder for you. All right. So what does that mean? Here's what I want to share with you. Um, I've done a lot of research on this, and I want to point out how the ultra wealthy invest versus how you're probably investing. Okay. So right now you probably have some money in stocks, maybe some in bonds. The end. That's where you've got all of your money. That's it. Okay. But what you want to do is you take a look at what the ultra wealthy people are doing. And this is where we got this little pie chart right here. So, yes, they have some money in the stock market, they have some of it on fixed incomes, but check this out. You got about 53% of their money is in alternative investment. So, this, guys, this is from Cape Gemini World Wealth Report. You can go out and get the same report I did. Okay. This is real information. But here's what's important. Okay. They are putting a large amount in real estate and private equity. Okay. That is essentially when you're investing in apartment complexes, boom, you hit on this right here. Okay. And also you get to hedge a bit. All right. So this is big. And here's the takeaway from this slide. This is a 25, 10, 53% split. Okay. The ultra wealthy are not putting all of their money into the stock market and hoping to make more money. All right. That's really not their strategy here. They do some, right? I think it's important. You need to have some in there. So what you want to do is get away from the 60-40 and try to mirror this a bit more. That's your takeaway from this. So the next thing I'm going to show you, this is a hypothetical portfolio assumption. Okay. What I did is I looked back over my portfolio and my partners, and where we hit was about, I think about an 88% return on investment every 3 years. Okay. And that's pretty good numbers. So what we did is we stacked side by side. So what we're going to see, you got two blue lines here. The light blue line is if you were to invest in apartments, and the dark blue line is if you were to invest in the stock market over 20 years. Okay. So here are our assumptions and what the results would be if you invested in stocks versus apartments. So this assumes a one-time investment. Let's say you had $250,000, you invest it and you just keep it in the stock market or apartments. A one-time investment of $250,000, no withdrawals, okay? No additional funds being added in there, and it's just 20 years, okay? Just start with $250,000 and let it ride for 20 years. This assumes that the stock market gives you about a 10% return. And if you look up stock market return over time, 20%, that's pretty much what it amounts to be. Okay. If you look at apartments, What we're doing is if you look at it, the returns average about 20%. Okay. Average annualized return. It's almost double the return. Okay. That's significant. And that starts to compound. Then we talk about cash flow. Here is a big thing I want you guys to realize. When you have money invested in stocks, how do you get that money into your account? You have to go sell stocks, right? So, but you got to sell the stocks. That's how you get it. And I've done this before. I've sold, hey, I need some money. So what I literally go in, I log in, I'm going to sell some stocks. Those stocks are gone. So there's not truly a cash flow component because once the stocks are gone, they're gone. They're not making money for me anymore. Apartments, though, you invest, the apartment stays there. Every month, it's making money. Okay. People are putting money into it every month. It's just, monthly income. We have our expenses. At the end, you have cash flow. That averages out over these investments are about 3 to 5 years, but over 5 years, the average is out to about 8%. So that's a beautiful thing is that you don't have to keep selling every month you got to sell an apartment to get some cash flow. No, the cash flow just comes in. At the end of 20 years, your stock value would be about 1.68 million, 1.7 million. That's not bad, okay? That's pretty significant. That's a good return. But what if you could have it be 4 million? Who would rather have, if you put money into this machine, $250,000 and you'd be patient for 20 years, would you rather have 1.68 or 4 million? Can I see in the chat? Can I see who would rather have 4 million rather than 1.7? I want to see who's paying attention. Who's in the chat? Who's paying attention here? All right, I'm gonna call out on you guys. I see you guys here. Chris, Justice, Randall. If you're not paying attention, come back to me right now. Who would rather have, I'll take the four, right? Exactly. So who would rather have more money? And this is passive, guys. This is not you doing any of the work. This is totally passive. So where you might have been thinking, I don't have that kind of money. You need to go find that kind of money so you can start getting invested. These are the types of returns that we're having for our investors, just as passive investors. Okay. So I'm going to break that down a little bit more. Okay. All right. I appreciate the feedback in the chat, guys. Thanks for coming back. And Chris, I hope your lunch is good. I'm glad you're paying attention though. All right. So now let's move forward a little bit. So we got this base understanding. So why invest passively in real estate? Now, a lot of us have this dream, and had it myself. I want to be a real estate investor. What that means is I have to do Airbnbs. I have to do single family rentals. I have to flip. I have to do wholesaling. Those are jobs. What I realized was that I bought myself a second job. And if I was going to go after another house, it was going to be a third job, then a fourth job, then a fifth job. And yeah, I can squish it together, but I didn't have the time for that. I just really didn't. Like I said, that's where I got into this passive investing. And it was a game changer for me. It was huge because I just got checks in the mail. It was that easy. Okay. So how does it actually work? If you're new to this, how does apartment investing work? Okay. You probably thought through some of this, but here's what we do. We buy and improve properties. We essentially force appreciation. So we purchase apartment buildings. We try to get them undervalued or with potential for improvement. We make very specific upgrades and we increase the value, which means we get to increase the cash flow and we get to increase the overall value. So that way, when we go to sell it, we make a lot more money. Number two is it generates cash flow. So like I mentioned before, tenants pay rent every single month, and it's pretty predictable what's going to come. Okay. So as you improve the property or, over time, rents go up. And that's it. So if you can keep your expenses as low as you can and increase rent, what does that mean? That means you get more money. So ultimately, what does that lead to? Long-term growth. The property appreciates over time, and it allows our investors to actually earn money, not only from a cash flow perspective, but from appreciation when we sell the property. So that's what we do. It's a very simple model. We've done it several times, lots of times, and we made lots of money for a lot of people. But why do we choose apartment housing? One of the reasons why we like apartments is it's a nice, sweet spot. Okay. There is always a high and consistent rental demand. There is a shortage of housing in this country, and there is predicted to be a shortage of housing basically forever. Okay. That is just something. Everybody needs a roof over their head. The other thing that's happening is the younger generation is renting longer. It's not the days where you move out when you're 18 anymore. You move out when you're like 30. Now, I hope that doesn't happen with my kids. I'm going to try to get them out little bit sooner. Maybe not right when they're 18, but the reality of it is a lot of the younger generation, they're going to go to college and they're going to rent. They might move back home and they're going to live with their parents for a while, or and then they're going to go back out and rent. Why? Because things have shifted. And they want to live in a place where they want to live. And nowadays, you can work remote all over the place. So they can do that. They can travel. They're not tied down to a mortgage. It just works out a lot better for them. Okay. The other thing too is there's this big affordability gap. So we're in a moment of time where the reality of it is a lot of people, they're just not going to be able to afford to buy a house. Okay. Interest rates are still high. Home values have not come down, and there is a larger and larger gap of people who have to rent. That's just it. Okay. Number two, here's a reliable income and lease renewals. So not only do we have reliable income month over month, but guess what? Every year we get to renew their lease. What happens when we do that? Well, they either somebody moves out and we get someone new come in and we get to increase rent, or someone decides to stay there and we increase rent. We keep up with inflation. And then we have the potential for higher rent yields. And when we go in and we'll buy a property, it's gently used, if you will, and we'll go renovate some of the units. After we renovate them, that gives us a $200-300 bump in rent. So as people are moving out, we renovate the unit. The next person coming in, we get to increase the rent. It is a very simple yet predictable business model, right? So it makes a lot of sense. Is this making sense for you guys? Is this helping you out? Can I see in the chat? Is this good stuff? You guys ready? You guys ready to invest passively in apartments? Good, 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 good. That's truly, guys. Like I said, I still do this. I am a general partner. I find deals. We invest in them, but I still am a passive investor. Okay, I really enjoy this method. Now, I want to go back to this because you might be thinking, I don't have the time, I don't have the knowledge, and I definitely don't have the money. Okay. So earlier I shared with you when I made my first investment, it was probably one of the busiest times of my life. I had way too much going on. And any of you that have children, I was in that moment where I didn't even get 8 hours of sleep. It was like, I don't know, 4 or 5 hours of sleep. And it was just crazy. Okay. And here's what I learned is that making this investment in passive income into these apartment complexes actually reduced my stress. Who wants to reduce their stress while making more money? Okay. I didn't realize that's what was going to happen to me, but it actually reduced my stress. And if I made it happen during that time when I was extremely busy, then anybody can do it. Okay. So here's the benefit. It's it's as passive as you want it to be. We're going to find the deal. We're going to do the due diligence. That's the inspection work. We're going to acquire the property. We're going to manage the property. We're going to send you distributions. And then every 3 to 5 years, we're going to sell the property because we're going to get you a nice big check on the back end. All you have to do is a little bit of education, right? I'm not saying to invest blindly, but what you really want to do here is, if you're interested, I'll send you some information. Make yourself comfortable. Um, but it's every month we're going to send you information about the financials. You can read through those. We'll send you monthly reports on that. We'll do quarterly meetings. We'll give you updates. We're here to give you the education that you need. Okay. And it does not take a lot of time. Most people that invest, they just set it and forget it. That is most people. Some people want to learn more, but most people set it and forget it. Now, number two is knowledge. Okay. So here's one of the things we're big on is we want to give you the education you need to feel comfortable. That is our job. We want to make you feel comfortable. Like I said, we're going to share with you information. We're going to help you through some of these more complicated terms. We're going to break that down for you. We're going to give you nice monthly updates, key metrics, financials. We're going to share that information with you. Okay. And it really doesn't cost that much. So it's less expensive than going and buying a new house. Okay. Even if you're going to do a rental, you can get in for less than going and buying a house most of the time. Okay. Especially if you're going to do like Airbnb or you're looking to scale your portfolio. Typical investments amount start around $50,000. Okay, that's not a whole lot, but they range from 50,000 to half a million. Some people come in with bigger checks, right? They start seeing how they can grow this. I've talked to people who are like, look, I'm going to start with 50 and we're just going to let it roll. And we're going to let it roll. We're going to let it roll and it go. So think of the example, you start with 250,000 and it gets up to 4 million. Some people say, I'm just going to give you $50,000. We're going to let it sit there for about 20,000, 20 years. And we're just going to let that baby snowball. Okay. That's a lot of people do that. The other thing a lot of people don't know about is you can actually use your 401k and self-directed IRA. Okay, that is totally cool. That's what I did. I rolled over some of my 401k funds into a self-directed IRA. It was actually very, very easy. Did all of it online, and it was super easy. So that is absolutely something you do. So if you have some retirement funds, and you're tired of the volatility, you don't feel like you're making enough, you want to pay a little bit in taxes on that money that you're making or what you're going to be paying in taxes, we got you there. We can help you with that as well. And our strategy here is in 3 to 5 years, we're going to refinance or sell. And I get this question a lot. Stephen, why don't you hold it for a really long time? So let me share that with you. The reason why we don't hold the properties for a really long time is you can grow your wealth faster if every 3 to 5 years you sell the property. And let me put this into perspective. I buy a property for 3 million. I sell it in 3 years for 5 million. We made $2 million in profit that gets distributed to you guys. Okay. So that is a pretty quick growth. But the cash flow on that would only be if we held it and we didn't sell it, you're looking at about 6 to 8% cash flow. Okay. That's not bad. That's good because you're paying less in taxes on that. So it's going to be, you're still outperforming the stock market, but that's it's just going to sit there and it's going to be not some nice steady cash flow, but where you can really accelerate your growth is when every 3 to 5 years we can sell the property. Okay, that's number one. Number two is a lot of people don't realize they think I'm going to buy and hold. And I'll use the example of this house that we flipped. We ended up selling it. We didn't rent it. It was about like 90 years old. Not every house is that old, but even the house I'm in now is about 25 years old, and it's to the point where it needs some upgrades. It's going to need a roof here before too long. It's going to need some new appliances. Some of the flooring is messed up. Okay. Probably needs to be repainted. The air conditioner's not too far from going out. What happens is if you hold a property too long, then all of a sudden you got these big expenses that keep popping back up. Our strategy is we're going to go in, we're going to put some money into this, we're going to fix it up, and then we're going to sell it while it's really nice before we got to dump a bunch of money back into it. So it actually makes more money for you a lot faster if we can get through these in 3 to 5 years. Is that making sense, guys? Okay. I just want to make sure you understand what the difference is there. All right. So I do want to talk about the elephant in the room. You're like, Stephen, this is too good to be true. There's no way. Like it's risk free. I didn't say that. Okay. I want to I want to show you, yeah, there are some risk. Okay. I want to call that out. So, but I gotta put that in perspective for you. Okay. So you might be thinking this is too risky. All right, hold on a second. So before I ever started investing in real estate, I spent several months, a lot of months studying how to invest in the stock market. I didn't want to do the 401k route. I was like, I'm going to invest in stocks. So one of the things that was hardest for me to deal with was the actual risk. Like, how do I invest in something stocks where, I'm trying to learn how to do this and not lose my money? And I felt like I really didn't have any control over it because I'm investing in somebody else's business. And if I have a question, I can't call the place where I invested my money. I can't call them and be like, hey, what's going on? Like, how come my stocks are down? Like, what's going on? Or what are you going to do to turn this around? I couldn't have that conversation. I really had no control, like zero visibility. It was kind of well, this company looks like they're doing good, but I have no idea. Okay. There's a lot of risk in investing in the stock market, and you have like no control over it. Okay. So I spoke to someone the other day that said, hey, I just always feel like if I invest in the stock market, I can't lose money. And that's not true. People lose money all the time in the stock market. Okay. Even your 401k does not mean you're not going to lose money. Okay. So then when I got into passive investing in apartments, I knew there was risk, but it was very easy to understand. The business model is very easy to understand. It was actually more appealing to me because the variables were way easier to control. And I got to build a relationship with the people that actually owned the apartment complexes. And I can call them, I can chat with them. Hey, I saw these numbers on the financials. What does this mean? Okay. That is night and day difference between investing in the stock market and investing in apartments as a passive investor. So, but I do want to talk about these risks. Okay. So market fluctuations, are there fluctuations in the market? Yes, there are. Okay. I'm not gonna lie about that. Here's what's important for you guys to know. We underwrite using a 5-year model. Why do we use a 5-year model? Because that allows for market cycles. We understand market cycles. So we pay attention to what's going on in the market. And our goal is to sell a property in about 3 years. We can implement our business plan in about a year and a half, maybe 2 years, but sometimes we need to hold the property longer, and that might be 5 years. But because of market fluctuations, we understand that, we underwrite for it, and we can refinance in 3 years, 5 years, hold it longer if we need to. There's levers we can pull. All right. So, what about tenant turnover and vacancy? All right. That could have an impact. All right. However, we mitigate that thing as well. I'm going to talk to you about that here in the next slide. We have a strategy to mitigate that as well. And then what about unexpected maintenance and renovation costs? Those three things right there, they could lead to issues, right? I'm not going to lie. You've got to have those things under control. But those are your three main areas: market fluctuations, tenant turnover and vacancy, and unexpected maintenance and renovation costs. How do we deal with that? All right. So risk mitigation. I already talked about number one. We invest in markets that we know and love. And I'll give you an example is Dallas Fort Worth. It's one of the fastest growing, if not the fastest growing metropolitan area in the United States, predicted to be that way for the next 10, 15 years. Great area. There's other areas in the United States, but we look for areas that are landlord friendly, business friendly, above average population growth, and then above average affordability gap. Okay. And affordability gap is the difference between renting and owning. And if you stack those things up, you mitigate that risk. Okay. The next thing we have here is about tenant turnover is proactive property management. So we are I should say tenant focused. That is our main thing we're working on. Okay. And we have multiple strategies where we're working on leasing renewals. We have these renewal parties. We have advertising strategies where we're always keeping our properties 90% or above when it comes to occupancy. Okay. We have a lot of different levers we can pull, but like I said, it is a tenant first model that we use. Then how do we avoid these major expenses that might come along? That's where we have what's called a due diligence, and that is think of it. If you ever bought a home, you do an inspection. We do it to the entire property. So if it's a 200 unit property, guess what we're gonna do? We're gonna go inside every unit. We're gonna go on every roof. We're gonna go under every building. We're gonna check every single air conditioner. We're gonna check absolutely everything, and we come in to the project knowing that we're going to need to spend some extra money on those things up front. It's like buying a new house and you come in with money to fix all the things that need fixing. That's what we do. Okay. So we mitigate those three things. And once I learned how to manage these things, everything really became a lot easier for me. Very different than with stocks. Okay. That was like, I can't manage this. Apartments, different. Okay. All right. Now, the last thing I want to talk about, and I told you guys I was going to share some information with you. This is how you pay less in taxes. All right. So I remember when I first started investing passively. This is when my CPA actually used to come over to my house every year for taxes, and she showed up at my house, knocked on the door, shut up, and I was so excited. I got my check stubs for the money that came, my mailbox money that came, and I said, "Hey, here you go. Like, here's all the money I made from passive investing." She's like, "I don't even want to see that. Please don't show me that. I want to see." She said, "I only want to see what's called a K1 document." She said, I don't want to see the money you make. I need to see the document that you get because that's going to show me your gains or losses. I was like, what are you talking about? So she said, look, there's something called depreciation that gets factored into this, and that's going to show paper losses. Okay. That's going to offset what you pay in taxes. So what I learned is that you can actually have passive losses that can almost completely offset your gains. Okay. Almost completely offset your gains. So if you make $100,000, instead of paying taxes on the full $100,000, what if you only pay taxes on 20,000? Who wants to do that? I do. And guess what? I do. I pay way less in taxes because of these investments. And that's even as a passive investor, guys. Okay. So, and I can tell you, I'm not going to lie to you when I say this. To this day, I have paid very little in taxes on the money I've made through apartment investing. And that's pretty cool, right? Okay, so let me go through a real quick example with you. So, an example, you make $100,000 investment, it makes you $60,000 of depreciation in year one. Okay, that's so you're going to invest 100,000 on paper. It's going to show that you lost $60,000. Okay, like, what happened? You invested 100, lost 60. Well, that's not really true. We get to, because you're investing in a business and real estate, we get to leverage something called depreciation. Depreciation has all these different categories. We hire a consultant, they come in and they say all these things have a usable life. You get to write those off. Bonus depreciation allows us to take that depreciation and squish all of it into year one. And that's how we can get such a big loss in year one. That can offset your passive income. Okay, so it does not necessarily mean that it's going to offset your W-2. If you're an active real estate investor professional, then it can offset your main income. Okay, or if a spouse is a real estate professional, it can offset your W-2 income. Okay, but that is something of a conversation for you and your CPA. But if you start having two, three, four, five, 10 of these investments, what's going to happen is you make money here, you lose money here, you squish all that stuff together and you're paying less in taxes. And then accelerate major portion of buildings components into year one using cost segregation. So there's another strategy. I don't want you guys to get like too lost in the weeds here, but we use something called cost segregation. That's where we put everything into little buckets and we leverage bonus depreciation. The short answer here is you're going to get what's called a K1 document. And that is going to show up. That's what you give your CPA. And that is all they need to see. They don't need to see how much money is making it into your account. Okay. So, guys, those are really the pillars. Those are the secrets to making a lot more money and paying less in taxes with your investment dollars. Okay. So here's what I want to do. I'm going to open it up for questions. If you got questions, put them in the chat for me, will you? Because that's what I want to do. I want to answer your questions. But while you're putting your questions in here, I'm going to talk about next steps. Okay. If this seems interesting to you, you want to learn a little bit more. Maybe it's for you, maybe it's not, but you're interested enough, you want to learn more. We're going to put a link in the chat right now and just going to schedule a call for you and me to meet. Okay. It's going to be an introductory call. It'll be really easy. Once you schedule the call, there's about a 20-minute video that I'm going to have you watch. And in that video, here's what's going to happen. I'm going to show you what it would look like if you had invested in some of our past deals. I'm going to show you some examples, exactly what it would look like had you invested in some of our past deals. I'm also going to show you if you were to invest going forward, at best case, most likely, and even a worst case scenario. Okay. I already talked to you. Are there risks? Yes. I'm not going to sugarcoat it, but I want to call that. I'm going to share with you the good, the bad, and the ugly. And the ugly is not that bad. Okay. But I do want you to realize that. And if we can get in the chat, if we have a link, we can share in the chat. There we go. Got it in the chat. So anybody that's interested in learning a little bit more, we got that in the chat. Okay. So you're going to watch this video and I'm going to actually show you also a K1 document. It's going to explain what that's going to look like for you. So you're going to learn a little bit more about that. But really all I want you to do is watch that video, prepare for the conversation. I want you to come with questions. Okay. You're going to be like, hey, I got this question, this question, this question. And at the end of that, it's your decision. Is this something that you might want to move forward with? Okay. And you're going to decide if apartment investing is right for you. If you have more questions, I get you more answers. And at the end of that, if you're interested, we'll get you signed up on our mailing list. That's going to be our priority list because when you first do these investments, you might need a little bit of time to get the money together. We're going to talk about that in our one-on-one call. So if there's something you're thinking about doing, we want to get you on that priority list. As soon as we get a deal under contract, we're going to let you know. And that way you can start deciding how much you'd like to invest. All right. So if you've got questions, go ahead and put those in the chat and I will start answering those for you. So we got some people on. Let's see what we got if we've got any questions here in the chat or in the Q&A. So I'm going to go over some of these commonly asked questions. What is a typical investment amount? Generally, they start around $50,000. Like I mentioned, there's different ways to do that. You might have cash in a bank account. You might have a 401k, and that's an option as well. So we start about 50,000, anywhere to 50 to 100,000 are the minimums we typically start with. Sometimes I get this question, do I have to be an accredited investor? Well, it really depends on the investment. There's some strategies we're working on right now where you can be either. Okay. It really is not going to matter if you're accredited or not. And if you're not sure what accredited is, you can look that up and we can talk about that on our call. Another question that we get a lot of times is this a liquid type of investment? Meaning, can I get my money out at a moment's notice? The answer to that also is no. These are, like I said, they're typically 3 to 5 years. And when you make the investment, it's really a long-term strategy. Okay. Maybe a midterm strategy. We're talking 3 to 5 years. You will be getting cash flow during that process. And then when we sell the property, we're going to give you a nice big fat check on the end, including the money that you initially invested. Let's see other questions that we commonly get. Can I invest using an LLC? Absolutely. We get that a lot as well. You can invest using an LLC. You can invest as an individual. You can invest using a self-directed IRA. Either of those are good options. If you don't have a self-directed IRA custodian, we can plug you into someone that can help you out and we'll get you started. Okay. All right, guys. Well, I want to thank you so much for your time. I hope this was educational and beneficial for you. And I look forward to meeting with all of you in the near future. Where we'll just kind of map out what this would look like for you if you were to invest and get started. All right, guys. I appreciate your time and I will see you guys in the next webinar. See you guys.